Hey, good morning, good morning. Man, look at that liquidity grab here on the hourly time frame. I was considering maybe a buy over here, but I think I've just got to wait for a little bit more structure. It's not looking too good. Hey, good morning, Ricardo. Yeah, I'm just going to be just a little bit more patient. See what happens here. Because we're just getting the new hourly candlestick open up. Pump it. Yes, we're looking for some pumps, hopefully. If price could come down a bit more, let me just wait for a little bit more structure. Because if price wants to dump, it's already created its highs on the hourly. So hourly's already created its top wick. We're below that 8 SMA right now. It could do like a small little wick fill situation down over here. But I'm still considering this as an overall liquidity grab for price to move up bullish on the hourly. Yesterday was a very good day for Goldie, even after New York Open. Yeah, yesterday was awesome. Man, yesterday all we did was buy gold. Just took buys. And now, you know, right now we're still looking at the same thing. If you go on the daily, and the daily time frame is pretty bullish, you know, we're still at the all-time highs right now. Wait for a little bit of structure. I want to avoid like any sort of unnecessary fake outs that might happen during the London Open. So I'm just monitoring to see how price is going to break these highs. Oh, yesterday, Vic, I'll buy from 3609. Imagine holding that. Man, can you imagine? So like, look at this. All the way from over here. All the way from over here. And then price just kept running up. Running up. That would have been like about 490 pips. Basically a whole daily candle. Be careful taking trades today, Vic. You might get 1,000 viewers. Well, why'd you say that? Be nice to get 1,000 viewers. We had 1,000 viewers once upon a time, and we took a buy, and it was a consolidation breakout. And we were like, yeah, and everybody like, you know, had a winning trade, and then the next day nobody showed up. So don't give two shits. Give two shits if we get even 2,000 viewers. You know, some people they just come and go like this. But what we truly love to build here is like a solid community. You know, that's why I always say, like, even if there are 50,000 people watching me, the people who actually build a channel are just, let's say if there's like 10,000 people who casually always show up. Those are the people who build the channel. Those are the like extra. They just come and go. First trade was an L. Second trade was a dub. All right. Wait, I think I gotta lock in kind of slowly over here though, because I think price might... It's trying to do something right now. We hit 16 pips on broker. Was planning on holding this as a big clean range down. Yeah, just monitoring gold. It's acting kind of suspicious over here. But it needs to I think it needs to retrace a little bit more. As a blick clean range down, should have got out at BE when planning to do this. This was also against the trend. Yeah, this was that's the thing. Like, if you're gonna take a sell, you gotta be very quick about your profits. You know, because this was definitely still counter trend. But then this was an amazing trade. I guess because it now like pushed up a bit higher. looking at it in hindsight, you're gonna look and see, okay, you know, it pushed up a bit extra from this zone, so it's like a reversal confirmation signal. So maybe this one has a higher potential of running, because this one was just a clean little counter trend move, you know, nothing too crazy. But this was like now a reversal confirmation, so that had a little bit more power in it for price to continue coming down. Yeah, but that was an insane dump, man. Price just completely melted. What a trade. Yesterday you said everyone was joining the stream because you were taking trades. Yeah, exactly. When we put this position thing on here, like, people start to join the stream. I don't know how it works, but it just works. All right, awesome. So I'm going to be looking for buy here now if price can break above these highs. Just trying to feel out the market, see where it's potentially going to be heading. Maybe that's going to be like a little bit of a fake out situation that just happened over there. And my stop loss is just going to be below this zone here. Oh, okay. So let's see. I needed to pull up though. We needed to pull up and create first a support. All right, chat. So I believe we are creating that support now. So if we break these highs, then I'm going to be looking for a buy. That hourly is a massive liquidity grab. See if we can pull up. Hey, good morning, Jay. Morning, Vikrant. Yeah, this thing is about to skyrocket right now. I want to see it skyrocket. It's like doing a small little grab here on the 5-minute time frame. So you got that 8 SMA confluence. 8 SMA confluence took out this previous candlestick lows. This could be a liquidity run if it starts to pull up and give us a long wick. But you can see it better here on the hourly time frame. That's a pretty strong liquidity grab below that support region. You know, we got the London Open. Our entries at the break of the hourly highs over here. So hourly candlestick will be reflipping, breaking its own highs after creating its hourly lows. We're also currently sitting at a hourly support area right over here. And we'll get that 8 SMA as confluence. Once this hourly candlestick reflips, it's going to be in our favor in confluence. Now, the only thing that I'm gonna do here is I'm gonna manage my risk if I get, you know, like 35% drawdown. Somewhere like 35% drawdown. That's where I'm gonna manage my risk. So I do hope we respect these lows and price doesn't move down right now. That means we just gotta keep waiting then. I saw another streamer test ad 3 and leaving a trade position on screen boosts views every time. I think people can see it. Yeah, exactly. They'll preview. Yeah, they see it on the preview and then join. But who even watches video on YouTube on preview for that long? Because you can only watch it. You can only watch one preview, so might as well just open up the video. Brother, thing is, I would like to say is that you don't tell viewers to buy now or sell now, because also viewer don't know you are selling or buying. So please always skip remember before tell us. No, I don't think you should be trading. If you can't see what's going on here on the screen, then you know you should just go find something else to do. Because you know, man, like some people, they're just a headache to teach how to trade. You know, they always have like some kind of a problem. You know, I don't understand what's so hard over here to understand. This is so simple. I'm just waiting for an entry. Like if you can't even understand this, man, just don't trade. Don't trade, or at least just watch the stream. You know, watch the stream for like at least 3 months. Get an idea of how we trade, and then you can start taking positions. But you should never take a trade that you don't know why you're taking this trade. So if you don't know why I'm taking this trade, don't take the trade. Because, you know, at that point, you're going to start playing the victim if it goes against you. You know, so if you don't understand the trade, don't take the trade. Because, you know, like that's what's going to help you to deal with your emotions. Is always when you understand why these positions are at least being taken. Because for me, this is a good trade. You know, whether this becomes a winning trade or a losing trade, like this is an awesome trade. And I think we got a lot of room over there on the left-hand side to continue moving up bullish. Look at this, we got resistance over here. We got another clean range from this point. Like if this is going to be a running trade, it can run really nice. Got about 82 pips. 82 pips above, you know, like 36.49. Yeah, this could be a really nice running trade. This could be a really good running trade. And you're also with the daily time frame too. Man, look at this. Price already had its retracement. We're still bullish. We're creating all-time high still today. We just tapped 36.59. Price had a big dump. Small little retracement. Now it should be ready to continue going up there. It should be a nice silver bullet here. Liquidity sweep. I enter an FVG here at 36.47. Oh, okay. Yeah, we want to see the more bullish confluence, the better. I just don't want to see price go down, to be honest, chat. Like if price goes down, that's gotta be kind of boring. Come on, Goldie, we're waiting for you. It's accumulating orders right now. It's getting ready for a pop. So this is the whole idea here. is this is a point A, right? So this is a point A. Whatever next moves are coming out, they're coming out of this zone right now. So we're not currently in a distribution. There's no trade setups right now. There's nothing. There's nothing. Price is still accumulating orders before it starts to distribute. And what we're trying to catch is that distribution. We're trying to catch the payout. Now that's when it starts to pick a direction. That means it's going to be paying people out. Whether that's going to be a bearish move or a bullish move, it's going to be paying people out. It's just waiting. Let's see. Gold overbought, but it doesn't seem to matter. Gold continues its rally supported by central bank buying and demand from investors seeking alternatives to treasury. The metal is technically overbought, but Goldman Sachs recently noted that if just 1% of privately held treasuries were relocated into gold, the price could approach $5,000 per ounce. Wow. Is that too high? No, that's perfect. It is worth remembering that one Bitcoin is worth more than 111,000 currently. Yeah, Bitcoin is on a different level. 111,000. How is gold something so precious like this still like, 5,000? I guess it must be like a supply thing. But yeah, I think price. You know what I noticed, man? Like it is like overbought, and then every time that it creates new higher highs, it just keeps pushing because people don't want to miss out on the bullish exuberance. Like every time it creates new higher high or break highs, it just pushes. Oh, don't ruin the structure, Goldie. I want to see the sellers here get faked out. It's like price is looking like it's picking the bearish direction now instead of moving up bullish. But I think the sellers here could get faked out. We're like a little fakey over here and then can come back and re-break those highs. This zone maybe 36.43. Oh. Man, it's picking. It's like it could still distribute for them. It could still move down for them. They have clean range on the left-hand side. Kind of annoying. They want to get a sell right now. Because it just be a small continuation from this zone. In that case, if it does push down bearish, so it's distributing towards the downside here. Following this previous bearish PA. Let's see what happens. Are they getting faked out? They break these lows and then it can start pulling up would be nice. Kind of ruined the structure though. Yeah, so you see the moment you start to see bullish momentum like that come in, you're like, damn, shouldn't have taken that sell. Because you gotta be like very confident. You know, if you take a sell or a buy, you have to be very confident with your position. You got to be happy with it. So you don't start regretting this and thinking, oh man, now I got to close the sell. Maybe now the buy is coming in. Looks like it was a liquidity run here on the 5-minute. Looks like it went for a deeper one below this wick. See that rejection? How it's still supporting, how it's still respecting support. So I'm still thinking my entries are going to be on this hourly reflip in the break of the highs to continue popping back up. So we got to see how PA behaves over here. Would be nice to get a bearish close and then another bullish move up. Come on, Jesus, 2 pips from entry. Yep, also almost got it. Not my day today. I will take one more trade and close and move to the next day. Nice. So we just there's a possible liquidity over here. Liquidity grab, little fake out. But it's only confirmed if the hourly can reflip and break its highs. And then, you know, we got that clean range on the left-hand side to fill. Come on, create that support. Create that support. All right, the volume might be kicking in here. See this 5-minute? Okay, so want to see this 5-minute really skyrocket from this point once it breaks 36.48. All right, we're coming in. Nice little SMA confluence there too. I think this 5-minute has moved kind of a little bit. It could still keep pushing up. If it was a fresh 5-minute candle, oh, that would be perfect. That would be really nice. All right, so I just got into my buy here. Expecting 5-minute to just continue moving up. Let's fly, Goldie. Come on. Just give us a clean distribution. That's the thing. This 5-minute will just have to hold. You know, we're getting a new 5-minute candle right now. You see, that's where I'm planning on managing my trade if it comes all the way down towards like 36.46. Because I'm expecting price to just continue moving up bullish at this point. But you still got 14, 13 seconds for a 5-minute candle here to close. So I want to see... Man, it would be nice to get a new 5-minute because this is kind of like already moved up, you know? So let's see if the new 5-minute can survive that bottom wick. Hopefully it's not too deep of a bottom wick. Doesn't even create a bottom wick. It just flies up. Would have been nice for it to create a bottom wick though first. Alright, create a small little bottom wick over there. Go back on the 1 minute. Because I don't want to see price struggle too much. I got my SMAs in favor and confluence, you know, within this general region over here. So I don't want to see a candlestick break below this previous wick lows here. If it breaks below those previous wick lows, then you know I'm just gonna manage at that point because I'm looking for a clean distribution to the upside. Yeah, 5 minutes good though. 5 minutes should have some legs to move up here. It's created a little bit more of a bottom wick too. So I guess on the 5 minute the SMAs were in between them like this. We gotta get through that 15-minute SMA on that 8 on the 15-minute. We got that 8 SMA over there. That could give it like a small little bit of a resistance. But you know, at the end of the day, price action is king. 5-minute SMAs are consolidating like this, so you know sometimes that creates some kind of consolidation. But you know, at the end of the day, PA is king. So if price wants to move up, it's gonna move through those SMAs. At least we got that 5-minute SMA there in drawdown, and we got the 1 minute. So I'm gonna be quite confident if it comes down to manage over here, because we got a lot of dynamic support. So it shouldn't really have an easy time to come all the way down towards like 36.46. Come on, Goldie, let's fly. You can get through this little 5-minute SMA. Come on, Bolly, I believe in you. Let's fly, baby. Come on now. Still got all this bullish momentum on our side. Daily's up 0.40% right now. That's what I'm saying, Goldie. That's what I'm saying. Clean range. We're approaching clean range here on the left-hand side. This is breaking the previous candlestick highs. So you see, we just broke previous candlestick highs. You got clean range on the left-hand side. Pretty nice position here for a potential runner as well. You know, up towards 36.58 and even all-time highs, even up towards the all-time highs. You get very nice running opportunity. But you know, you gotta pre-plan this. If you're planning on leaving a runner, you know, you can secure like 80% and then just leave the rest to run a break-even over there. Nice. Let's fly, baby. Come on now. So close. So close. How much did we already pop up here? About like 22 pips. So close to hitting break even though. It's only about like 1 pip away. Yeah, I think I'm going to put my stop loss here to break even. Stops are going to break even. As it's breaking above these previous highs, don't want to see it come back down there. And we got that 1 minute 8 SMA. Could just have small reaction off of. Got a new 5 minute candlestick open up. Just need to survive 5 minute bottom wick over here. We also got 5 minute 8 SMA. So I don't want to see price come back below this zone over here. I don't want to see price come back below this zone. That 5 minute still doesn't have a top wick either. It's got to survive the 5 minute bottom wick. Man, but once it flips and re-breaks these highs, price should be off to the races. We should be off to the races at that point. Oh, come on, Goldie. Stop doing that. See, can we survive it? These are like those fake out volume traders, you know, like price breaks above a new high like this. They get excited with these counter trend positions. Come on, Goldie. See what's going on here on the 1 minute. Oh, it broke below the 1 minute SMA. Not good. Yeah, I got stopped out of break even. Damn it. There it flies up. Oh my days. They'll watch it fly up right now. But volume is crap. And this volume was coming in so nice with that 5 minute. With that 5 minute and that 5 minute candle was pushing up. On to the next one. Was that? Got $3 closed before BE. Going to get my forex coffee. Oh, nice. A real forex coffee. Black coffee. No sugar. None of that mache latte with sprinkles and all them flavors. That's Starbucks. Yeah, and like the price can still move up. It can still move up, but that was a good move. Like I was expecting a follow through, you know. I wasn't expecting this kind of drawdown, especially have a 23 pip move up and breaking previous highs. See, it's just a shock in the water because if it moves up right now, it's basically just targeting orders from below here. So it just becomes like, you see, it's like a small little liquidity situation. We also had one that happened down over here as well. Usually if there's no shock in the water, you know, price should have just kept moving up bullish. So I don't want to deal with that. See that small liquidity here, and you also got one right over here. So yeah, I mean, price can still move up, but I just wanted a cleaner move. Because there is a bit of a shock in the water. Because, you know, candles don't behave like this when they're supposed to be going towards a certain direction. These are just, you know, like, why, if you really think about it, why would a candlestick open up like this, break its all hourly highs, reflipping, break its all hourly highs, clean range, to open up immediately, to not even have a top wick to come and take these lows out, especially if it's trying to move up right now. I get it, maybe if it's a probability, it's a sell over here and price moves down, all right, fine. But if it's really trying to move up from what we're even expecting that was happening all the way down over here, like, price should not have come down to even take out those lows. Like, that's not PA. That's just a variable that we get in trading. You know, that variable is just that you've all had these trades. You know, like, we've all experienced these trades where it's like it takes you out before it goes in your direction. It doesn't mean that it was a bad trade. All it means was you're just having to navigate a variable in trading, which is that that price action of liquidity grabs. That's all it is. You know, and if there wasn't this, man, my hit rate would be so nice if it wasn't for this. I mean, everybody's hit rate would improve slightly a bit better, because you got some days where you get these and some days where you don't get these situations, and, you know, you just got to keep it moving. That's why every trade is different. You know, it's the same setup. Man, some people ask me if it's a valid entry, why not just take it over and over again? It's because of this variable over here. It doesn't matter if you have an A+++ setup. You know, you still got to deal with this situation. You still got to deal with that. Bro, one question on US copper. If yes, how much is your lot size? Not talking about 1%. Risk of your balance. Yeah, my lot size is not going to help you though. Because it's better if I tell you how much percent I'm risking. Because, you know, lot size, even if I'm trading $1 million, are you going to replicate my lot size? Or if I'm trading 50K or 100,000, are you going to try and get a 50, 100K account? You know, lot size doesn't matter. You know, a lot of these people you also watch, like, who make, like, you know, 50K a trade, 45K a trade. It's the same trade you're taking. You know, maybe you're just making $500 in that trade. You know, but maybe the other guy makes 50K. It's the same trade you're taking. It's the skill that you're focusing on. You know, the money will come. The money, the lot size is always changing as your account grows. You know, also lot size can change per setup. Depends on how big your stop loss is. You know, sometimes you get a big stop loss, sometimes you get a small stop loss. So me telling you lot size is not going to help. What's going to help is a percentage risk. Yeah, I see it's just struggling a bit here. Man, I still think that range there on the left-hand side would be amazing. This 15 minutes is still open. It could still reflip and break its previous candlestick highs. Same, but different. And if you really want to know my lot size, it's as simple as just doing a little bit of due diligence. You know, all you got to do is click on my social media links, or even go on my YouTube channel. On the posts, I usually like send my trade setups. Man, that's all you got to do. All you got to do is a little bit of research. That's it. You got all the links down over there. You can see everything. You know what they say? Institutions say we're better institution because you know, the idea behind trading like hedge funds is like the information is available to everybody. You know, the hedge fund which makes the most money, they're only the best at using that information. You know, but it's like you could all have the same access to the same information. It's like, who's better at actually doing the due diligence on that information to make money? You know, it's nothing secret. There's no secret. If you got poor research skills, then, you know, then I don't know. I don't know what to do, what to say. I close it with little profit too. With the data recently, this time is bad for follow through. Or follow through according to my TradeZilla. In the 25-minute, it could be good. 3650 psychological. Oh yeah, 36. We got 3650 here. Yeah, I got 3650. But it would be nice. I mean, it started breaking what time? This is a 320. 320, the hourly candlestick had already warmed up. It's like Formula 1, you know, when the cars go on the racetrack and they kind of like swerve like this, kind of warm up the tires. The hourly was already warmed up. 20 minutes. It started breaking. It started breaking here at, what time was this? Yeah, like 3:23. And it created its hourly lows too. Man, it started breaking its own hourly highs as well. I don't know why it's struggling so much here. It's back in reflipping below that 8 SMA, but that was in our favor in confluence for this thing to skyrocket, to be honest. This thing was gonna skyrocket. If this was pre-NY, this thing would have skyrocketed. Just caught a clean move on GJ. Think I'm slowly getting it. Oh, nice. Yeah, I mean, look at GJ. It's still reacting off the 200 mark. It's having a pretty hard time here, this psychological mark here, 200. Keep tabs of GJ fundamentals because it's waiting on some interest rates, I think, from the yen. Oh, but that was such a nice move. Man, look at this. Look at the way price came down. Accumulated some orders and then started correcting the move on the left hand side. Yeah, that was definitely, this was the GJ move. Pushed up about, like, you know, 20 pips. 20 pips and the daily is about to reflip over here. We're down 0.03%. Daily is about to reflip, but you know, where are we even going to be heading to? Because 200 is right over here. Every time we come 200, we just have like a rejection. So GJ is like heavily, you know, just like all markets are heavily fundamentally driven. This market here is waiting on something. Because if it breaks 200, I think it's clean moves to the upside. Above 200, monthly looks good. Weekly looks good to keep running up. You see, it's like, that's a psychological resistance. You know, like it's not always about the resistance that you see on the charts and the candlesticks, but you also got these psychological resistance marks. See how 200 holds? I think this is a perfect example to show you dynamic resistance, in a sense. You know, you got your hard resistance, your technicals, and you got dynamic. It's like psychological marks or even our simple moving averages. You know, see how candlesticks pull up like this? Respect. See the small reactions we typically get off of them. So these dynamic supports, they can be your best and your worst friend, because obviously as you're coming into the trade, you got your SMA crossover, expecting some kind of volume to come in. But once you start crossing below the SMA, you start to see volume starts to die out a bit more. You see how it's like dying out? So you see this buy over here, it's already over. In your opinion, what levels are more significant to use as SLs or entry points? I would say the stop loss should just be in an area where it's like if price goes through that zone, you can comfortably close your trade. You know, like for me, I had my stop loss. I put it down over here, but I was gonna close it around, you know, like 16, 18 pips. 18 pips. So technically speaking, if you want to look at risk to reward, it had moved up 1 to 1.16. Because I was gonna close here anyway. I was not gonna take the full drawdown. So that kind of gives me like a different perspective, you know. So it kind of also helps me hold the trade longer when I look at it from that perspective. I think a lot of trading, when it comes to holding trades and that sort of thing, it's really psychological, you know. So you can always make like some kind of rule for yourself to help you with the psychology of, let's say, holding a trade, whether that's securing like 80% at a 1-to-1 and then letting the rest run, or trading with a daily trend. That can also help you hold trades longer, because if you take a sell and you know price on the daily candle is moving up bullish, you're not going to be willing to really hold much of that drawdown, as opposed to if you took a buy. You know, if you took a buy and you're on the right side of the market, then you know that it's a pretty good buy. And also other things can help you hold your trades a bit longer is timing. Like, you know, what time is your entry model coming in? Is that a time of high volume? You know, it's like, is that a time that you normally see like price moves in your direction? But now it's like ranging. Here we got some kind of a resistance and we got support. So now this is becoming a no trade zone. Just saw your Instagram. You use 1 minute time frame most of the time. Yes, sir. 1 minute with a higher time frame confluence. Because look, even if we're on the 1 minute time frame, we can't not ignore these other time frames here. You know, you gotta look at the daily time frame. Gotta see where the daily's heading, the 4-hour, hourly, and the idea is like they're all giving you like some kind of a clue of where price could be heading to next. Even if you're on the 1 minute time frame. Because see, even like a move like this, we had to wait for, let's say, about 37 minutes. You know, we had to wait 37 minutes. Even if it's a 1 minute time frame, we still had to wait 37 minutes. So that's basically a whole 30-minute candle. And then on the 5 minute also starts to create some structure. Oh, and did like... Yeah, we needed to break these previous highs. We needed to break this. You know, that's why it's important. If you're looking for a shotgun play from, let's say, from here all the way up towards here, man, you really needed that this candle was going to break these highs. But you see, if you don't break those highs, then there's a lower probability that that price continues to move up. It's a lower probability. You see how the variables shift? See, trading is like always moving variables. You know, variables are always changing. The market is not the same market that we got into here was not the same market when price was operating at these levels. You know, it's always shifting. So if you understand that flow of probabilities and variables and how they shift, then you're going to be able to, you know, like manage your risk, take advantage. You can take advantage of special conditions in the market. Sometimes, you know, you're just sitting on the chart and then you see a candlestick do like some crazy liquidity grab, and then you're like, whoa, okay, so that's interesting. And then your next candlestick starts to move up. So that's a unique situation that just happened. You know, if you see something like that just happens and then you have some decent kind of structure, it changes because now it increases the probability now for a certain thing playing out. So like the variables are always like shifting. That's why we kind of like want to manage our risk if we see that price might not be doing what we expected it to do. You know, I think it's really important. That's what we did on yesterday's trade. And it takes off stress as well. It makes trading like a lot more stress-free, because look at what we did yesterday. Look at what we did yesterday on this trade. Look at what they did yesterday on this trade. So we took a buy here. This was at all-time highs. We got some drawdown, but this is exactly what I'm telling you. Man, I wish I could zoom into this thing. This was, if you watch this reel and how we even broke this down, you're gonna see how you can anticipate these moves in the market, you know. So we're like, okay, you know, we're not gonna manage our risk now because this is most likely gonna become a fake out. So we're always like preempting also those variable shifts. And man, once those variables kick in, I think that's a good example over here. Then you can use that. Let's say if you didn't even get into the trade and you're like, okay, look at this volume now. Look at how that 1 minute is starting to pull up. You see, that's what I'm talking about over here. This candlestick is just probably taking some people out. Some market psychology, so it can start moving up bullish. Correct? So sometimes you see that. You see that's that little wick here. Now you can see it on the 5 minute time frame. A little bit of a liquidity grab. If you hadn't gotten in, that's something you could have noticed. And then be like, damn, okay, that's interesting. You know, at this point, price should be moving up. And then, you know, at that point, we had reduced our stop loss because it wouldn't make sense to come back and re-break those lows. You know, and then price moved up. So all this is in the WAP database. You know, all this information, it's in the WAP database. Look at that. You know, it's like also what we're expecting over here. You know, it's so good. Price did a liquidity run below here, taking out these wick lows. And I know you all know what I'm talking about. I know even some of you guys trade like FEGs and ICT concepts, but you know what I'm talking about because this is just pure organic price action. And you know, that's the way that I trade, is based off of a organic price action. It's not even necessarily do with a strategy, but it's just the way the candles operate. You know, like we can all come to consensus that makes sense, you know, but when we start talking about strategies and inversions and, you know, maybe there's a rejection over here, that's to get very personal. Yeah, that's very personal stuff. Maybe there's a 200 EMA or something. That's all very personal stuff. But if you see like a candlestick do this, grab below these orders, that's what we see as a liquidity run below here. You see, you can use that as confluence for your entry confirmations, and then that look beautiful at this moment. And then you see that's the same thing that happened here, but the difference is this is not a wick. Maybe it's a wick on a higher time frame, but it's the same thing that happened here. You see how the candlestick came down and took out these lows and moved up, and how this candlestick came up, took out these highs and then moved down. So that's what we call a shark. There's a shark in the water, because this is not like how price should behave. You know, it shouldn't be like whiplashing sellers here and then whiplashing buyers here. It should just pick a direction and move in that direction for your good trades, your really good trades, you know. Or the trades I think which make the most sense. They should do that. But in these conditions, you can't win. You take a buy, you lose. You take a sell, you lose. There's a reason why the market is coming here and here. That's enough for majority people. People see a candlestick close or break above the highs, they take a buy. People see a candlestick break below lows, they take a sell. And that's how people get faked out. Get those whips. But now we're in a no trade zone. See, markets accumulating orders here, waiting for distribution. It's kind of a shame. The only way we can get away with these trades is if we got a tighter stop loss, because that still pushed about like 22 pips. Maybe if I tighten my stop loss a bit more, but I wanted to see it run up. There was so much potential for it to run. Like even the 1 minute had some clean range right over here. Yeah, but now we're sitting at support. Sitting at support. Quick scalping gold. Buy to upper range. It's crazy. Now it's coming back down again. I wonder if it's gonna fake these guys out again, because I already did it here once. Basically, you know what happens sometimes too? It's like it takes out, if prices to move down to fill this range, it's like it takes out the sellers. You know, if someone take a sell over here, you know, stop loss is above here, takes them out and then continues in their direction. Man, the market is not your friend. It is not your friend. That's why we don't overtrade. You can make money in the market, but only if you don't overtrade. If you overtrade, you're gonna have, you know, this looks like just on a 5 minute, but this will happen on all time frames. You know, something like this type of example, it can happen on all time frames. So you can't really escape it on the 30 or the 1 hour or the daily. It will happen on all time frames. You know, we also got like small little fake out over here. Look at the V-shape reversal. Price broke below. And quickly back into the range. And it's still got that hourly wick fill on the left hand side over here. I think that's what it's doing. Man, it would have been so beautiful. This thing should have just moved up. It had so much confluence for those moves up. Look at that. The hourly retracement, break and retest, hourly reflip, break of the highs, moving with the daily trend bullish. Look at that. Oh, man, this would have been really good. This would have been so awesome. But it's probably going to move pre-NY. You know, there's nothing I can do. There's nothing I can do but just sit on my hands and wait. Because no matter how bad I want to take a buy and have that buy skyrocket, I can't move the market. You know, the market's only moving here during these specific times. So if it doesn't happen now, it's most likely happening pre-New York. That's the next high probability time that we're going to see price continue to move up. Because now with the London, it seems London is having some more retracements. Just going to retrace for a bit and then move up later. It looks like the classic Quasimodo setup. Quasimodo. No. Quasimodo? Is it this guy? Let's see, Quasimodo trading. Oh. Higher high. Okay, break below. Yeah, that looked like the Quasimodo. On the hourly, right? Oh, no, 30-minute. Man, look at that. I think there's a name for every single kind of like a pattern you see in the market. But you know, we don't look at it in terms of patterns. For me personally, I look at it like candlesticks. I just look at, because I feel like when you start looking at things like, when you're looking at so many things as patterns, you could get like some kind of a bias. You know, the bullish flag, bearish wedge. You get some kind of a bias. The only pattern that I use is head and shoulders. So maybe we might just have one here. But the rest of it is just like candlestick reading, clean ranges. Yeah, this is a pretty nice shotgun entry over here. Previously, price moved up from the break of the highs about, you know, like 53 pips. And this is consolidation. So you got consolidation, reversal, signal. Consolidation, reversal, signal, boom, boom. It's like price broke above the highs and now it's struggling to move up. If you took a buy here expecting it to keep running bullish, then you see price struggle like this, you know, that's a reversal confirmation signal. See, because your best trades are not gonna, they shouldn't like struggle like this. They should just move in your direction. So like a lot of us have this intuition usually that a trade is gonna become a losing trade, but we do nothing. You know, you gotta listen to that gut feeling. That gut feeling, you're gonna see in majority of the time it's correct. When you know you're about to lose a trade, you know, when you know you're about to lose a trade, isn't it usually a losing trade? But we just don't do anything. You know, we see the variables change. Our intrinsic nature is telling us something is shifting here. It's just you don't understand what it is or what to do. But deep down, something's telling you like something's changed, but you don't know what to do. But you still hold the trade because you don't know what to do. You know, you set and forget. Set and forget is for dummies. Set and forget is people who have no capacity to adapt in variables. You know, that's set and forget. That's why every time you feel that, you gotta look at your trade and say to yourself, what can I do to lose less? You know, because most of the time your gut feeling is going to be correct in a situation like that. And I think in the long run, you got to save a lot of money. But it's definitely a fine balance, because you know what happens is also at the same time is once we start learning how to manage risk, we mismanage our positions a lot. Because now we're getting kind of almost excited to manage the risk. So we can like jump the gun sometimes. So it's just about finding a good balance. You know, sometimes we manage our risk also too early and then price still moves in our direction. So then it kind of puts you back to square one, right? Then you're going to be like, oh man, like now, you know, let me just set and forget. You know, screw this. Let me just set and forget. It's easier. But it's just about finding a balance with your strategy. Because remember, it's your strategy. Whatever strategy you trade, it's like your strategy. You gotta understand your strategy. You gotta understand how it moves. That's why when I manage risk, man, I know candle is not meant to come down there. Based off of all the sample sizing that's been done, when it's time to reduce risk, we're gonna reduce risk. We gotta reduce risk. I have nothing bad to other strategies, might be working for them. Yeah, of course, you know, you can't all trade the same strategy. That's why trend lines exist. That's why you come onto trading view here and you got like so many, you know, you got so many of these Ichimoku clouds, bunch of stuff in here. But you know, most of this is garbage anyway. But yeah, when it comes to like RSIs and that sort of thing, like everything to some extent works. You know, that's why people use them. But that doesn't mean that that's gonna work for you. So whatever path that you choose, it's either gonna be a price action path or a strategy path. If you go a strategy path, you're gonna be limited in the amount of growth that you can achieve. You're gonna be limited in the quality of education that you receive. You know, that's why I also spend so much money on sending our kids to like really good schools, right? Because we're under the impression that they're gonna receive a quality education. You know, so if you're learning like just a strategy, it can sometimes limit you because, you know, at that point, it either works for you or it completely doesn't work for you. But if you have an approach to markets where you're looking at candles and price action, organic PA, something you truly understand, none of this fugazi stuff, then you know, that's going to be a very solid foundation for you to move forward. And you're just only going to get better at that point. If you got a solid foundation, you're just only going to get better. If you got a strategy foundation, man, that's going to be like a shaky foundation because it's either going to work for you or it's not going to work for you. So you see, that's why for me, at some point, I just realized, man, I got to learn how to read candles. And even if I make a strategy, it needs to be based off of candle movements, like in terms of just candlesticks, you know, support resistance, clean ranges, accumulation distribution, fundamentals like the FOMC, macro news, geopolitical tensions. Like these are the main points that you want to hit those points. You know, it's like you play those games like, you know, those Dark Soul games where if you got a character over here, you can do 500 points damage. You know, if you hit him on the head, you're going to do 500 points damage. And if you hit him on the body, maybe you're going to do like, let's say 50 points. You know, problem is some of y'all are hitting 50 points. You're hitting 50 here. You're hitting 50 on the arms. You're hitting 50 here. You got to be hitting 500 points. You got to aim for the head. Aim for the thing that you see. Okay, so this is doing the most damage. So let me just aim for that same spot all the time. Let me not waste my ammo on these other things. These other things are like additional. You know, these other things are like the SMAs. The SMA maybe gives a bit more points. Maybe we shoot him on the... I don't know, shoot him somewhere else. Maybe you're going to get like 200 points. You're going to get 200 points. You know, that's SMA. Then you're like, oh, look at that. 200 points. Okay, so I'm going to keep this one. That's the estimate. But price action and candlesticks and momentum and volume and news, understanding those are like, you know, the 500. Trend, momentum. And then you maybe gonna shoot here again. Then it is okay. So we got head and shoulders. Head and shoulders maybe gives like, you know, 100 points. So you're gonna shoot it here, you get 100 points. But most of the time you're focusing your aim on the 500 points. So even if the 200 is against you or the 100 is against you, you know, you're still looking at the 500. If that makes sense. You know, that's how we look at a confluence. PUBG teaches you good ammo risk management. Yeah, then you got... You know what teaches you good ammo risk management? The Last of Us. The Last of Us. That's a really nice game. Man, you're gonna run out of ammo so quick if you're not careful. It's like a zombie apocalypse game, you know? You run out of ammo so quickly. That's why in The Walking Dead, they always trying to kill the zombies with like weapons. with like swords or something, you know. So you don't want to waste your ammo. Ammo is the most important thing. Ammo is what's going to save your life. You know, you're gonna need ammo. You gotta need ammo. So you can't just spray it all willy-nilly. You know, so if you got ammo per day that replenishes, you got about like 3 bullets. You know, for me, I got 3 bullets every day, and it's all about survival. Surviving the apocalypse of trading. You know, that's how I kind of look at things. And the best way I can do this is if I really need to use a bullet, then I'm going to use a bullet in one section, the next section, and then the next section. Instead of just spraying it all at once. You know, because think about this. Imagine you're being chased by like 100 zombies and you have 3 bullets. You know, you're obviously not going to win that fight. Because if you're over trading, you're not going to win that fight. You're going to quickly run out of ammo and you're going to experience a lot of bleeding. You know, a lot of bleeding on your account. So the best thing to do is just keep it moving, keep running away, and then only if you really need it, then you got to use it. I mean, there's so many ways you can look at trading. You know, like just because it's 2-dimensional like this and all you're seeing is candles move up and down, that's not all that you see. You can see a lot on these charts. You know, it comes from your experience, your background, whatever it is. You can bring your own experience into the charts and start experiencing from a different perspective. Because everybody has their own edge. You know, I love video games. I love stuff like the way I explained to you how the charts operate. That's just my personality. So I see it more than just the candlesticks. Like, you know, we're all looking at the same chart. But you can always try and understand it better for yourself. And I think that's how people would learn in general. Is they always connect something foreign. They try also sometimes to connect it to something that they might already know. And say, oh, yo, that's actually kind of like this. Yeah, it shows some kind of a similarity to this. Capital is precious. Yeah, sir. On the 5-minute, if this comes up now, that will be a fake out on the high and the low. This is garbage. Yeah, if it comes up now, then there's no winning here. You know, it's like the fidget spinning price action. So I also call like fidget spinners. So you see, break above the highs, break below the lows. Like sellers fake, buyers fake. And then now it's faking the sellers again, potentially. Crazy. Nobody makes money in these conditions. People most likely make more money when the market is more directional like this. You know, like this. See, no shock in the water. Look how easy price moved up over here. You got like 1, 2, 3, 4, 5, 6, 7, 8, 9. You know, it just moved straight up. No shock in the water. Respect the previous candlestick close. Also here, once it decided to move, it just moved. Why is it here? Why is it here that it breaks the highs and pulls down and breaks the lows and pulls up? Because every moment in the market is unique. So the more you overtrade, the more you find yourself more in these situations to give back your trades, your money to the market. But I've noticed some weeks though, you can get away with it. Overtrading, you can get away in some weeks. But I think in the long run, you're going to find yourself more in this situation. Michelle Fletcher, thank you for the sub. What pairs do you recommend and what time frame do you use? I would recommend gold. I was so scared of gold when I started trading because everybody used to say it was volatile and it's a scary thing to trade. So that got to my head. That got to my psychology. Because everybody used to say how volatile gold was. I never used to trade gold. You know, until maybe 4 to 6 months in. And then I started focusing on gold because GJ was just so horrible. Like, man, GJ sometimes just has no volume. And it's so hard to trade and it's so choppy. At some point, I couldn't even trade GJ anymore. Then I started focusing on gold. And then the rest is history. Because, man, gold is beautiful. It respects price action. You know, there's not so much politics with gold. It's most of the time mainstream politics. So you don't have, like, small politics affecting the pair. Like you would do with a currency, for example. You know, during this GJ time, we had Bojo, Boris Johnson. We had this thing about the fisheries going on. And there were a lot of like internal politics which were affecting the pound. It's quite difficult to trade. You know, but gold is less manipulated in that sense. So I recommend 2 pairs. But to be honest, like you could probably get away with just trading gold. You become a Goldspot expert. Because if you're just taking like 1 or 3 trades a day, then each hourly candle for me at least is going to give me one move. You know, I can expect at least one move from each hourly candle. So it's like more than enough. Again, the problem with trading more than one pair is you get confused. You know, you start doing this, you start making excuses that maybe you need more screens. And sometimes that's going to confuse you. Because, you know, maybe sometimes you're going to get a buy setup here. And then you're going to get something, let's say on GJ, a sell setup here. You know? And then it's like having to navigate both of the trades at the same time. So, you know, in the long run, it creates a bit of stress to do this. Lot sizing as well. You got to calculate everything. And sometimes you get into a bit of unluckiness. If you trade the NY session now, if you want to trade the NY session, now you got to worry about news. You got to worry about news, navigating the news. You know, sometimes news can affect this and can affect that too. London and NY. Yeah, London, pre-London, London, best sessions. No news. Pre-London and pre-NY. Pre-London all the way up until pre-NY. Best sessions, no news. See, like today was actually a pretty good day. We don't have any news. All orange folders. See, core PPI, tomorrow, core CPI, unemployment claims. All right, we got a bit of news for the New York session to wrap up the week from Wednesday, mid of the week volume coming in. Wednesday, Thursday, Friday. Got some ref folders here. But today, man, today's an awesome day. So we got like, it's like a sunny day in the market here. It's like those days where the sun is out and there's no clouds. This is Tuesday now. We don't have anything to worry about in terms of fundamentals. Maybe unless it's like a flash news. Gold futures hit fresh record on rate cut bets. Investors anticipate multiple rate cuts this year after weak US jobs data. It's funny because, you know, they're kind of like posting the same thing but said a bit differently each day. Because there's not that much, you know, there's not that much news that changes. We're all just still waiting for these rate cuts next week on Wednesday. USD rate cuts. Getting a tan? Yeah, it's a really good day for a tan. Gold has climbed nearly 40% this year on central bank purchases and rate cut speculation. Analysts and investors, he says like smart money is already in the market because we're just creating all-time highs. Analysts and investors widely expect more gains for gold. Goldman Sachs Group Inc. has said that precious metal could rally to nearly $5,000 an ounce as investors shift just as a small portion from treasuries into bullion. Still, total ETF holdings of the bullion are still lower than the high seen during COVID-19 and outbreak of Russia-Ukraine war, showing more room for gains. Oh, that's nice. I remember during the break of the Russia-Ukraine war, there was a analysis that we did there on the monthly time frame that lined up so beautifully. Is because there was a fake out that happened before the war broke out. And it's crazy to see how price action lines up so perfectly with such things like that. You know, because if you think about it, if you're about to go to war and you're the president of the country going to war, you're obviously going to have financial advisors tell you like, hey, listen, we can make some money here. Because we're moving the market. It's the same power Trump has on Twitter. When he tweets something or Elon tweets something, then the markets move. So they still operate like this. Presidents definitely do that. Donald Trump definitely does that. Putin, Kim Jong-un, like Chinese President Xi, they all do this. They all leverage this. They all leverage this in the market. So it's crazy. We saw like a little fake out happen, but we're already expecting that price was going to break a resistance on the monthly. it had been rejecting that resistance so many times, but the tensions were increasing, you know, and then price did like one fakey. It has support, it did one fakey, and then the war broke out, and then man, price just blew past that resistance and kept moving up bullish. And we were talking about it. We were saying like, oh man, you know, something feels a bit different this time. Because the last times we came up, it was just like came up, rejected, came up, rejected. But this time we came up, we rejected, and then we created a support, and then we held the support for a bit. You know, something shifted, and then it did the liquidity grab before boom, price moved up bullish. And you're gonna see similar thing like that also happens on the lower time frames. You're gonna see a liquidity grab before like boom, price skyrockets upwards. But it's crazy when it lines up though with macro fundamentals on the HDF. But it just goes to show you how fractal that markets are and how the concepts, whatever it is, like it still operates the same way. That's price action. Yeah, go look at reversal confirmation. You see it's giving these sellers a hard time over here. It's telling them, hey guys, you got to manage your risk because once I start breaking above 36.46, coming for you. Imagine taking a sell here and then price starts to do this. This is not a comfortable area to be in. So if you got a stop loss, let's say you put structure above structure over here, it's about like, you know, 73 pips. You could reduce your stop all the way down over here to about like 27 pips. Because I see price is now giving you a hard time. It's giving you like a signal of sort. It's signaling to you that your sell idea is needing of some kind of an adjustment. So it's signaling to you. It just needs like this 5 minutes already moved up, you know, it has like 3 minutes 30 seconds in it. So I don't know if this is the one that just skyrockets, but most likely maybe the next one of it closes bullish and then next one opens, it'll have more legs to move up. It just got a new hourly candlestick open as well. So the market speaks a language, you know, it's just about not speaking back, but a understanding that if you were to, let's say, manage your risk like this, that don't take it in terms of, oh, maybe it spikes you out and then continues in your direction. Take it in terms of like, this was the smartest thing that you could have done. Because if you didn't do that, there's a higher chance in the long run that those trades, those types of trades, they just go directly against your position. I think the problem is like we just have really bad habit, you know. We got really bad habits of stuff like strategy hopping. We all try a strategy for like a week, maybe 2 weeks, and we strategy hop. Once it starts to get a little bit hard. But you know, like no strategy is 100%. Like you just must understand the sample sizing data and run with it. Should I buy at this price for long or not? Man, it's accumulating beautifully. This would be such a nice buy right over here. This would be such a nice buy. A small little reversal confirmation too. Price come down and then do this and break above. Damn, looks actually so clean. GJ down hard. Ooh, what? What entire nation? What entire nation is this? GJ just came down 41 pips. Holy. That was just one candle. A beautiful accumulation. Oh, look at this. So clean. So clean. Man, this setup, this one setup here has made me... If it wasn't for this one setup... I don't know. I love that setup. That's my favorite setup. That's my favorite setup. It just plays so beautifully. And it respects PA so nicely. Even when it comes time to manage risk. Look at this. 41 pips. This thing's moving like gold. Nice little SMA in there. Break of the lows by 199, 648. Sheesh. I think we could definitely, this was a news driven event. I think something came up, but nothing scheduled. Let's see if there's any yellow folder. There's nothing scheduled. Wow, Israel military tells all residents of Gaza City to evacuate. So sometime early on. 1:13 a.m. Eastern. It was 37 pip candle and 30 sec BE for the day now for German 40. Happy now. Let's see, what was it? Bank of Japan might increase interest rates this year despite political situation, according to reports. Yeah, I knew it. This is something to do with the yen. That's why we're holding 200 so strong. What a beautiful setup that is. You know, the thing I noticed about the market, if the market was truly random, it wouldn't always set up before big moves. You know, I usually see the market usually first set up before a big move. If it was random, I feel like most situations like this would happen, like even just as price is just randomly going up and then just starts doing that. But if you pay attention, there's usually some kind of like a setup that happens before the move. Remember, drink more water, guys. GJ, wow, that's so nice. Probably the cleanest setup of the day. Yeah, this is like nice little tight stop loss there too. Put it like this, stop loss above here, but like, you know, 14 pips. Man, so clean. Beautiful distribution up here too. Look at this. Gotta take a buy here. Boom. Gotta take a sell here. Boom. It's a clean and smooth. See, clean and smooth. So it wouldn't give you a hard time. Sometimes, sure, we get a bit of drawdown, but it's okay. It's okay. As long as it doesn't give you too hard of a time. This just moves up. Just one bearish candle and then moves up. Endless opportunities for managing risk. Oh, look at gold. Look at gold wants to start moving up here. Little reversal confluence. Man, I feel like Goldie wants to skyrocket. Just gonna watch this. I'm gonna paper trade this. Because it's also kind of volatile. There's a little volatility in there. You're down for like 2.5 hours now. See how the currency strength meter is doing. Got like a bearish dollar, which is good for gold to move upwards. I think it's waiting on that 5 minute to at least close in the next 40 seconds. But it's kind of volatile. Look at this wicks. It's trying to form a lot of wicks over there. Let's see how the 20. Let's see how it closes. Could have been a small retracement down before the move up. This is within a range. This would have been a really nice run over here if that plays out. Because it has a range here from here to here. That's about, you know, like 46 pips, 45 pips. And then above from there to there, you got another range. Above this area here is going to be about, you know, like 73 pips towards resistance. It's like a simulation trade. Price came down, little consolidation. Consolidation, break of the highs, and then for price to continue moving bullish. New London session yesterday was too good to be true. Holy. Why is it so volatile? I've usually noticed stuff like this happens on London session. This has been something with the London session of late, that it's just been kind of like a low volume-ish time. You know, volatility can also happen because of low volume. When there's low volume, there's get like a lot of choppiness. So the way I'm thinking, maybe right now, since we don't have any fundamentals, it's probably just a low volume, because like Asia moved up nicely. You know, pre-London had some pretty strong sells, and then it had some decent buys. So eventually it's going to start chopping up. You know, eventually it's going to start have to accumulate orders, and then it gets a bit volatile with low volume. Because most people, most of the trading activity seems to be coming in at specific times. Even if you look at the way NY session has been of late, that's when usually that daily direction has been coming in for the all-time highs to keep pushing and pushing for the rest of the day. So it could also just be like some kind of investor behaviors, you know. They know like London session is maybe a bit risk off, and then they're coming in like at these specific times. And that kind of gives you an edge as well, because you're going to see these kind of patterns happen over and over. Oh, nice, it's breaking here. Gotta buy at the lows. Sniper entry. See what kind of break this is. Needs a strong break though. At least a stronger break to kind of confirm its push from this area. So I've just got to like pepper trade this. But it looks really good. Looks really good to move up here. Nice little 8 SMA too. 15 holding candles. 30-minute looks good. The reason I'm not taking is because my first trade should have played out. If I don't see my first trade play out, I just move over to the next session, whether it's like pre-London, London, or pre-NY. GJ break down again. Oh! Holy! Why are you running?
Why are you running? Why are you running?
And now it's for gold now to do something. It's now time for gold to move up bullish. Come on, gold. We want to see you get up there, but look at this volatility. Look at how it's pulling up and down so much. But technically speaking, it looks good to move up there, because the sellers are having a hard time for price to move down. So just gonna watch. I have no problem waiting. I like my money. I like to protect my money. Partials taken. Let's see greedy TP now. Man, you got a crazy entry though, because now this easy break even. UJ also dumping. Compete. I don't like GJ. Last year I'm doing good with it, but this year my strategy that doesn't seem to work and got SL most of the time. Oh, so deleted GJ from the watch list. Oh, nice. Yeah, I mean that's a thing. Market conditions change. That's the thing. I've been trading now for close up to like 6 years. I've been trading my system for about 5 years. You know, so I'm pretty confident that it can survive the market cycles. The only thing that changes is not the strategy, but maybe stop loss adjustments. But the main core entries, they remain the same. The core perspective of entries remain the same. Sometimes you just gotta have like certain different stop losses. Yeah, but for some people, maybe they're gonna do like 1 year and it works pretty good, and then the next year the market cycle shifts. You know, like every year we tend to get like some kind of like a small shift, which is normal because the economy is changing. But price action, for the most part, remains the same because markets can only at the end of the day move down, bear, sideways, and bullish. They can't do anything besides from this. Only thing is maybe just psychology of the pairs, you know, like small little liquidity grabs, maybe volatility. I remember the beginning of this year was quite difficult, despite last year being such an amazing year. You know, the beginning of the January was kind of difficult, you know, made like 14%. It was kind of difficult. You see a lot of W's here, but this was a lot of like scalping, you know. This was just a lot of scalping. But the moves, I don't know, something about January, guys. I don't know why it was difficult, but I just remember the beginning of the first quarter for me was kind of difficult. It's kind of difficult. Because it's not just about the wins. It's about like how to get the wins. You know, like for example, September here has been difficult. I'm still up with September 11%, but it's still been a difficult month. It's not been very straightforward. I guess that's when discipline and patience really saves you. So if you have that characteristic, like even during the difficult months, it might not seem so bad to somebody looking from the outside, but for you, you know what kind of patience and discipline you needed. You see, like this, for example, this, man, this required so much discipline from me not to take this move. Because if I took this move, yeah, it could still play out, but the way I would manage my risk on this, I probably had already gotten out of my trade. Oh man, look at it. It's still moving up. You see, because it's like it retraced a little bit further in. So I wouldn't want to take on that additional retracement right over here. So that's what I mean. And man, it takes you some crazy discipline to watch the market and not take the trade. Even if you see it, to just hold yourself from taking the trade. Because you have rules that you're following. Done, no luck today, just wanted a clean range fill. Yeah, that's wild. It came right to that mark. That's like 36.43. It is volatile. You could sense it, right? You guys could sense it too. How candlesticks were getting into like a small volatility. You know, it's like nuanced things like that, which I think usually helps develop your edge in the market. It's like small little behavior, you know, because when you see it in hindsight, like when the candlesticks close, it's a different experience than when you're seeing them print. You know, it's also not just about how candles are closing, but also how they're printing, correct? I think that can give you a very good idea of what to expect from the market. And I know you guys know what I mean. I know you all know exactly what I mean. Goldie about to pump it. It's pumping it, but it's like that volatility can be a double-edged sword, because I've seen that volatility really, you know, when it comes in, sometimes it can kick you out and then have the push. But if you can survive the drawdown based off of how you're planning on executing, then it's a double-edged sword. You know, it's like 50-50. But usually when it plays out in your favor, oh man, it's really nice. Because you just have to survive the... You see, like, for example, this candlestick right here just took out these previous lows. So let's see what it does next. What contributes the most to win rate? 1 to 3 trades a day. That's it. Look at the hourly GJ candle. So crazy. Jeez. Man, this thing is just nutting. Its hourly candle is already down. How many pips? 90 pips. I'm still looking to see. We haven't gotten any live news being pushed out. It seems to have been some kind of a macro event. Like an unscheduled event. Beautiful distribution. See, that's the thing about the market. When it picks a direction, it's going to move in that direction. And then nothing stands in its way. I don't know why Goldie's hesitating so much over here. It has nothing in its way to move bullish. It has clean range. In fact, this would be the best place for buyers to get in. You know, generally speaking, because that would be the bottom of the range. Right over here. Because when price has to move up, it picks a direction, it's going to be in distribution from that point. Like, you'd kind of expect more of candlesticks to move up like this. Right over here. Because that would be a distribution. But the inception would be at the lows. Down here. It's got some really nice range up towards like even resistance and then towards that next resistance. I don't know why it's struggling so much. It also got these sellers over here. It's dropped these sellers from these previous positions. So it's got the liquidity to run up. Sometimes big candles like that is followed by a big reversal. Because it feels oversold. Now it's some kind of a support. Surprised Ricardo's not yet in. But that's a tricky one. How would you know? Because you see how it's pushing down? You could have thought even this candle would be the one. Then it still keeps pushing down. Then you got to be very quick on your management. If you're going to be trading like this, trying to catch the lows, you got to be super quick. 15 minute on GJ doesn't have a top wick. 30 minute. Come on, Goldie. Fly. Fly, Goldie, fly. Struggling so much. It's like low volume. Look at this. Gold doesn't struggle, you know. Gold, when it moves, it moves. We don't like to see gold struggle. Because it's a different kind of a struggle. You know, this is a different kind of a struggle because it's moving slow. Those scare me the most. So if I could take a buy here and then I see price struggle like slow, those are the worst type of struggles. I would even prefer like quicker drawdowns and then some kind of continuation. But the slow struggles, but I would say this trade will still have a better probability than the sellers would. Because at least they're still going with a bullish exuberance. It's kind of difficult. Because if it comes down now, it's going to be a bit unfortunate because, you know, sellers would have managed right over here. That would be the smart thing to do. You know, because it's giving the sellers a hard time, they would have managed their trade right over here. But the market has a funny way. You know, the market has a funny way. It's like a dial. It's like a switch. When it doesn't want people to make money, it makes it the most difficult possible scenarios that most people would not make money. That's why the market's not always manipulated. Because if it was always manipulated, it would be almost impossible to trade. But you say in a situation like this, buy, sell, buy, and then you gotta hit a sell again, and then it starts consolidating, and then it's a buy. But it'll be crazy because, like, if it actually buys, at least it would distribute to somebody and someone can get paid. But you know, it also did a small little liquidity grab here. It even took out Ricardo. So that would also be an unfortunate slap before price moves up. It's like when the market decides it doesn't want to pay, it's going to do these little intricate things where you could even have the best freaking entry. Look at Ricardo's entry, man. The best freaking entry, and then price still comes there, 36.43. Then you wonder like, what the fuck is going on here? You know, because all this is like calculated in a sense. It's like perfectly balanced. So I would say if it actually broke these highs and then came down, that would be so brutal. But if it moves up, I think it already took some orders down over here for it to move up. And that's why I tend to stick to one trade per session, because no matter what you do sometimes, in that specific session, you just can't get a winning trade if it doesn't work out the first time. BTC, please. All right, let's see. Bitcoin right now is... Y'all know what I'm talking about too. So don't pretend like you don't know what I'm talking about. Because it's happened to you. It's happened to you before. You take a buy or it's a loss. You take a sell or it starts to consolidate. Then you maybe mismanage or maybe it just becomes a loss. And you're like, damn, what's going on here? And you feel like the market's manipulated. But it's not, it's just like you're over trading a time in the market that it is manipulated. But Bitcoin is at 113. It looks like it wants to pop up. But again, you know, keep tabs on the fundamentals. Public companies now hold over 1 million Bitcoin, marking a key milestone in corporate adoption. Though skepticism remain about new capital inflows into digital assets. I don't know. Okay, I lied. I do know. If you have a journal and you're actively trying to get better in trading, you're gonna know. You know exactly what it is because you're recording all of this. But it looks like in this scenario, it did eventually move upwards, but it first needed to take out some lows. It had no business coming down here. But again, it depends on your market, on your perspective on markets, because some of you might just argue that the stop loss maybe was here and all this was noise. You know, this is a I can already preempt like arguments because that's typically how some people would see it as well. But it's kind of a different scenario when you're learning to read candle by candle and you're learning psychology of candles. And you start to realize certain things that just don't make sense for it to happen before a move up, unless it had a kind of like an ulterior motive, foul play. And I see that's the sellers though. That's what I mean. Like there's still a beautiful distribution for them, to be honest, because as I said, remember what I said about these guys? The market is giving them a warning. It's warning. That's why I said the smartest thing they could do is like close their trade right there. It's not about if it played out for them. It's about these times, which are going to happen most of the time, that it's going to go against them. So you see it's giving you a hard time, you're just going to cut the trade because they're already trapped in there. Nice, cut the buys. Yeah, I would have been stopped out because I would have managed mine would have been a bit tighter. My stop loss would have been a bit tighter. I would have probably lost like 0.30, 40%. No, 40%, 0.40% maybe. That's why I don't overtrade. Because the moment I see it's not working the way I want to see it work, there's a high chance that's going to happen, even if it plays out for me. So if you manage to catch it, you know, amazing. Awesome. Just required a wider stop, maybe below like some kind of a support over here. But you see, it made sense, right, guys? Kind of made sense. Made sense because now you're in a very nice running position. Because you see, that's the inception right there. That's the beginning of the move. You know, that's why I mentioned like whatever you're seeing from this point onwards, it's just distribution. How you catch the trade, that's your business. How you catch the trade. But this is what you're seeing right now is people getting paid out. That's why we can all take the same trade, but it's like we kind of take a bit differently. You know, but the thing is, you want to be where majority of the people catching these positive trades are. How you catch it is your own business. You know, some people could have caught this on a trend line or a pivot point. So it just depends on how you're consistent. But at the end of the day, we all ideally want to be coming in a situation like this, correct? Like if we're just gonna make it as neutral as possible and see what look at the market for what it is. Ideally, all we're all trying to do is catch either a move up like this or move down like this or distribution like this. You know, when we put our differences aside, that's all that we're trying to all catch. So now this is the distribution point where it's like, man, this would be a beautiful runner. It's filled up the range. That's the first range, and this will be the second range up over here. So I hope that makes sense. Everything we spoke about. Because, man, this is going to happen again. It's going to happen again and again and again. So next time you see how I say profit taking, top of the range. Because next time you see it happen, man, you're going to be ready for it. But you see, that's why we say solid foundation, guys. Solid foundation. It happens on all markets too. It happens on Bitcoin as well. Is the same ideas on BTC. Same concepts. See, Bitcoin, this is a daily. It's like distribution, consolidation, distribution, consolidation, distribution, big consolidation, distribution, consolidation, distribution, fake out, another fake out, couple of whips over there. That's what Goldie just did. And then it came down, consolidates. It literally just did this. Goldie just did this. Price moved up, BTC. This on the daily even. Daily, fake out at the highs, fake out at the lows. Break of the lows for the second time, consolidate, then whip the sellers again one more time. And that's why you always feel like no matter what you do, you can't fucking catch a trade, because every time if you're approaching the market and if you're approaching the market in a way you don't understand the movements, you gotta feel like the market's always faking you out. You gotta feel like it's always faking you out. You see, that's a reversal now. It's doing even an inverted head and shoulders here too. It's warning the sellers down in the higher time frame. See, it's this now on gold, same thing. Fake above, the small fake below here, looks like a wick, and then it rebroke for the second time to come back up. Went to walk the dogs and come back to this distribution, nasty. Still gold sell from the top. Yeah, man, like you got the best entry and it still came down. Your idea on GJ? GJ, since it's come down, you can't take a sell now. You've already missed a sell. You've already missed a sell, so... That's it. What are you gonna do? You've missed a sell. Price has already moved down. You know, if you look at the left-hand side, you don't even have range. These ranges are maybe like higher time frames. But majority of the moves already happened. Maybe there was even a scale in consolidation break. I would say this would be have been the only area where you could have scaled in. But the only reason you take a sell like this, because the structure doesn't look that great, is if you knew what was moving the pair. Because if you understand what macro fundamental is moving the pair, you know, sometimes that gives you confidence to also hold, to just execute, anticipating continuation. But that was the only structure right here, unfortunately. You only had one up here and one here. So the rest of it was just distribution. So it's kind of like difficult. And then also taking a buy is risky because there's something clearly moving it down. So if you take a buy, you might just end up being liquidity. You see, this is profit taking by resistance. You see, why does price act like this? Why does price act like this? It has nothing to do with risk to reward. This has more to do with structure. You know, so look at this. If you take a buy here and you got your stop loss over here, and let's say if it didn't hit your 1 to 1.5, you still have to recognize that resistance has been hit. You know, because it's not just about your risk to reward. This is why when I talk about trading, I talk very universal and very as much objective as I can talk about it. Because, you know, for some people, they're going to see this and say it's not enough risk to reward. But what about the other traders? You know, there are other people in here who maybe even had tighter stop than you, and that's already been a 1 to 3. Just the same way as these buys. You know why I managed risk on this buy? Because this buy on my usual 16 pip stop loss had already hit my profit marks. So I was also considering these other trades that I take with a 16 pip SL. That already had pushed up about a 1 to 1.43. So I was also considering this. That's why I put my stop loss to break even, because I'm thinking about the other players in the market as well. It's not just you in the market. You know, that's why you say buyers make money, sellers make money, pigs get slaughtered. So if you're not able to have a dynamic perspective on risk, then it gets easy to ignore the risk entirely. And then just do something like this and then forget about that resistance. Should we liquidate now and then buy lower? Like in this scenario, since it has some legs to keep moving up, it would be definitely a hard break even at this point because it's hit resistance. Because you don't know if price is just going to range here. It could just range here until New York session because you got like some sideways movement. And then break out later. Then you get caught in a range, you know. It will kind of suck to get a profitable trade and then come back into drawdown just because you're still caught in a range. But you see, that's why it's like risk-free, secure something, let the rest go. Man, this thing could go all-time highs. Fill this area here. This zone is like 75 pips. Actually, taking 1 to 2 RR profitable trade in long term is way harder than what we all think it was. Yeah, it is hard. It is. It's okay. So the thing is, if you trade on a 1 minute, you're gonna have a higher chance of catching 1 to 2 RRs. Yeah, because your stop losses are gonna be more refined to the structure. So you're gonna have an easier time like catching it. But generally speaking, yes, it's difficult. Generally speaking, it is difficult. They say you got a tight stop loss, man. Look at yesterday's trade. How much RR would this be? Look at this. And it kept moving up. Or look at this previous trades. How much RR is this? You know, easy 1 to 2 plus. So if you got a refined strategy, look, how much RR is this? Easy 1 to 2 plus. If you got a refined strategy on the 1 minute, look at these. How much RR is this? That's the only way you can cash your RRs, but you gotta have a refined strategy. And most of them are coming off the 1 minute time frames. It doesn't always happen, but you get better chance of catching those moves. See this? Look at how big that is. But someone will see me secure earlier and say that it's not a good strategy. You see, those are people who make problems for every solution. You know, because they're gonna see you secure early and then it's gonna say it doesn't work. But why is it moving like that? It all comes down to what you're trying to achieve. You know, as your account size grows, even trust me, when I was trading a smaller account, I was holding these trades longer. You know, I was most of the time looking to hold these trades longer. But you try grow an account and start making a lot more money, and we're gonna see if you can pay your monthly bills with one trade if you're not gonna take that profit because of RR. You know, you just have to put yourself in that position. If someone gave you right now $5,000, for example, and said there's a 50-50 chance that you can make $10,000, you know, are you going to refuse the $5,000 for a 50-50 chance to make 10,000? Like the 5,000 is there. You can take it right now 100%. It's a 100% probability of securing $5,000. You know, you're gonna take it. You're gonna 100% take it. But if it's like $100, someone says $200, you're more willing to gamble that. So it's a perspective thing. You already want to be thinking about trading as if you're trading a big account. You know, and it's always good to have this data as well to see on the times that you do need to hold a trade or you want to hold a trade, at least you have the option that you can do that to maximize your gains. But at the end of the day, every day, the main focus is just trying to get paid. Because we're not here to be right, we're here to make money, correct? No one gives a shit if your analysis was right, but if you made money from the trade, I think that's it. That's it. That's job well done. Because it's harder to be right. You know, if you took a buy here, for example, I did see a buy confirmation setup after I took my sell this morning. If I took that buy, we could have had a profitable trade. You could have still made money. But if you wanted to be right and you thought price was going to keep going up to, like, let's say all the way up over here for 1 to 2.14, then you would not have made money. You know, then price would have gone against you. Why don't you use prop firms? Because personal account, nothing beats a personal account. A personal account, when you grow your personal account using prop firm challenges, that's the best, that's the goal at the end of the day. Because it's more of your money, 100% of those, that money that you make is your money. The trading conditions are better on actual regulated brokers. There's no rules to follow. Most people trading prop firms. Look at all these gurus you're following. There's a link in the description box for prop firm. Why is I have nothing against making extra income. That's totally fine. But majority of it is just affiliate marketing. You know, I did my prop firm. I got my account to a size where I was comfortable and could pay my bills. And that's all that I needed. You know, if I want to continue trading prop firm, then at that point, maybe it's an affiliate marketing thing. Because I don't want to trade prop firm. Why would I want to split my capital? Why would I want to follow rules? The PA on prop firms is trash. It's designed to make it difficult for you. Yeah, and there's also, exactly, you said this as well, given your stats, you literally milk prop firms. And then there's also that question about getting payouts. You know, why would I want to work so hard and be so disciplined so I can beg for my payout? You know, hopefully they give me my payout. Because again, if you're profitable, it's a, you know, it's a conflict of interest. So this is going to become a problem. But, you know, it usually comes down to the PA for me, though. The price action is just, I don't like the price action on prop firms. I don't like whatever liquidity providers that they use, or, you know, the tweak with the settings as well. They kind of tweak with the settings. They make it kind of difficult. I'm 1% up today so far, but I feel like I'm only up 1% today. That is my latest problem to beat. Think about it, like 1%. 1% could be a $500 day. Could be a $1,000 day. So if you made 1% today, I think it's, you know, it's pretty good. Just as long as when you're taking your other trades as well, that you're always looking to lose less. You're kind of looking to protect your 1%. Hello, on the Discord's question section, I made a question about fourth entry. Can you please help with this? Oh, let's see. Hello, just a question. I'm new here. I'm not understanding this entry. There's more. Wait, what is this? Oh, on the left-hand side, there's more support level. Why is this a valid entry? Thank you very much. Really, thanks. You can help me. When valid, a similar entry theoretically, if is a clear movement near left. Why is it okay? There are other points. Oh, because this is based off of this is like a volume-based entry. So what we typically say is, if you're expecting volume to come in, these levels, these are also 1 minute levels. You know, these are lower time frame is always going to have a level, you know, because lower time frame prints more structure. So you're always going to have some kind of like a level. But if it's clean, I think if it's clean, the better for the move. But because it's a volume-based play, you're expecting that price can go through those zones for XY reasons. So I can't remember fully what was happening here because this is just one time frame on the 1 minute on a random day. But it looks like we got a small liquidity grab here. Price accumulated somewhat, and yeah, I need to see the full picture. But if you're expecting volume to come in, that's when, you know, we could get through these levels. Because there's always going to be a reason, yeah? Even if you look at this setup here you sent me. Oh, here's the 1 minute. Yeah, the 1 minute in this one looks clean. You see, the cleaner it is, the better. Then candlesticks can move through them. But for these 1 minute entries, it for me doesn't really matter even if the candle here didn't have a top wick. Or even if the candle closed without a bottom wick, because those are volume-based plays. So it's like a slightly different environment. Because you can even get candle on the 5 minute, push down and close like this without a bottom wick. But since we're expecting volume, sometimes it can be so much volume that it can't create that bottom wick. So that's all it is. But for sure, the cleaner it is on the left-hand side, the better. You see on this one, it had a few speed bumps here on the 1 minute. But at least the 5 minute, if you go on the 5 minute, the 5 minute was clean. 5 minute was still clean for price to move up there. I prefer 1-to-1 with higher win rate. Also, why don't you... Okay. Yeah, 1-to-1. I think on average I have like a 1-to-1. But my trades can run longer. And it's also kind of hard to say what I really have on average because I'm always looking to see also sometimes to manage my risk. You know, like for example in this trade, this pushed a 1-to-1.4, 1-to-1. Roughly around a 1-to-1.4, 1-to-1.5, even though my stop loss is here. So it's kind of hard to say. Because even my trade yesterday also reduced my risk. You know, we had a stop loss over here, but you see, risk was reduced, so it also changes the risk to reward. Nice. Price came down. Little consolidation. Move up. Clean range. Ooh. Oh, man. Price came back to take those guys out. Yeah, I think this would have taken some people out over here. See, that's very intentional because it knows. The market knows where these entries are. This is something we speak about a lot on this channel. Seeing our entries get retested as well tends to happen before price continues in that direction. You see, that's why when you like lock in and you have certain rules for yourself and you have certain systems you're trading, you're able to see the hits. You know, you're able to see the hits. These are like those 500 points we're talking about. If you hit the guy up here, that's like 500 points. You're able to see these hits. These are the areas where it's like more... There's a lot more of a repeatable pattern which happens over and over again. And then you question yourself, why does it happen there? That means you're doing something right. You know, that means there's a higher probability that that's where a majority of the people are sitting at. When it does these repeatable patterns, you know, just like we spoke about how price broke below support and then consolidates. Then you're like wondering, why does that happen? And then has these bigger moves on the opposite direction. Because you see our psychology is now coming into line with what the market is actually doing. So you're looking at it more in terms of candles and not just a strategy. Correct? Because this is not a strategy necessarily. This is just how candlesticks are printing. Breaks below, struggles, reversal confirmation signals, pays people out, profit taking at the top of the range, comes back, retests those entry models. You know, it all starts to make sense. So you're getting those 500 point hits. 500 point hits. You see, I think the more you can gamify something is always you're going to learn so much better, so much faster. I just want to short, but by watching you is stopping me. Yeah, I mean, it's not just by watching me, but you also deep down know inside that you're looking to short a market that's moving upwards. You know, so you're also afraid of this happening to you because markets are just moving upwards. It's that gut feeling, you know. You know a short is not a good idea unless the short is somewhat giving you a very nice signal. But you see, we have another range here. That's like 71 pips. See, now this is the next area it needs to get through. Because it's already distributed orders from here up to here. Now it needs to move from here to here. Maybe this one it saves for pre-New York in about an hour or so. Look at that hourly candle here. Still no bottom wick. Here, take a short. Take a short quick. Take your short here. It needs that bottom wick, sir. Stop loss to the heavens. Full port. Full port for 10 pips. Come on, Goldie. You also gotta make that bottom wick. You got nice little SMA, 8 SMA confluence. This is how some people actually trade. Then on the flip, you're gonna put your stop loss to break even. When the candlestick flips. It is a flip though. Give it a good flip. Come on, flip, Goldie. Oh, this is intense. This is intense. Oh, okay, here, guys. Stop loss to break even. Imagine, this is how some people actually trade. You might not have found those channels yet, but this is how some people actually trade. The full port, and then such a small thing, then it's like, oh, break even's hit. Man, which is insane. You can get a lot of wins like that, but it's always when the market doesn't go in your direction. That's when the problems come in. Oil is tanking. We haven't looked at oil in a bit. Yeah, oil looks like, you know, oil generally speaking has just been holding this like $60 a barrel region, like 60, 75, 80. It's like it's not really moving anywhere. The oil market has been kind of slow, just generally speaking. But yeah, it is tanking right now. The 5 minute, the higher time frames have been kind of slow compared to something especially like gold, which is up already like 30% on the year. Also, DXY has like some kind of an artificial hold on the dollar over here. It's not yet really moving. It's just been holding for the most part, waiting for the rate cuts to come in. But dollar is about to tank too. But yeah, that was an hourly bottom wick which was formed. Man, like a move like this will have such a good probability to play out the closer we can get to this next hourly open. This hourly candlestick is still a bit too soon for this move to be like very much in line with volume, at least in my opinion. Hey Yassine, good day, good day. Ethereum looks like previous monthly created all-time highs. Man, beautiful consolidation break here on Ethereum. of the monthly towards these lows. See how price came down, moved sideways, and then corrected that move. Really nice entries. But in the grand scheme of things, like ETH has not really moved anywhere because you only had this one parabolic move up and it's created this range. So it's in a massive consolidation. This is like Tesla. Basically, it's a similar PA like Tesla. So if you believe in this, then there's a lot of upside to it, this instrument. Much like Tesla. I think Tesla actually wants to buy out Elon Musk. Like, I think, what do they say? They want to give him how much? Because they see the probability here. They're happy Musk is happy. His new package would give Musk a control of roughly the rest of Tesla's board outside of Musk controls 7.5 million. Why did Tesla threw 1 trillion at Musk? Yeah, something happened recently. The board said it believes that Mr. Musk singularly possesses the leadership characteristics necessary to transform Tesla and realize its long-term mission at an unparalleled level. Why Tesla threw 1 trillion at Elon Musk? The Tesla board of directors decided to offer... Oh, let's see. Tesla board of directors have decided to offer CEO Elon Musk. They unveiled the new package on Friday for shareholders to consider that could give Musk up to 423 million additional shares of Tesla stock in the next decade. Those potential shares might only be worth 148.7 billion as of Friday's closing price. Or as of Friday's closing price. But as it goes up, obviously, you know, this can go up quite significantly. Because if you look at Tesla right now, it's still in its infant stages. This is a very beginning stage of Tesla because it's in this majority consolidation over here. It hasn't really seen its growth yet. You know, we're just underneath 500 bucks over here, you know, and once we start to distribute, this thing could be heading up towards like 1,000. Easy. You know, so you're more investing in the person and the company and the ideas more than just the looking at the instrument like this. Because that's who's driving the price. I guess that's why they're looking to pay Elon Musk so much. So it could be a good investment here. It's at 347 bucks. But none of this is investment advice, just small disclaimer. Yeah, it's a pretty young market this is. Oh, okay, so gold is finally moving now. What a move today. Gold gets out of the range. Yeah, finally. But it had to stop out the buyers here though first. Look at it. It came down here specifically to stop them out before having the bull run. See, the market's not your friend. Like, it moves. I get the mathematics of markets like buyers and sellers to make the movements happen, but the more you're on the charts and the more you see candles print, you start to realize the market actually almost moves almost kind of like on its own discipline. Because it's too perfect. Like, this happens way too often. It moves on its own. Yeah, it moves on its own. That's what it does. It moves on its own. It's too perfect, man. It's too efficient. If it's really random and it just got random buyers and sellers making the movements, it would be more random than this. I've literally explained to you guys that even from the beginning here and like anticipating the reversals and everything like this and these concepts of retest before continuations, it happens all too often. Man, but look at this clean range over here. Now it's getting filled. They should have just paid out the buyers without that retracement. But you know, you have profit taking up here. A little bit of profit taking. Retest the zone, then move up. Filling up this next area. See, that's what I meant, chat. They're going to look back at this in hindsight, and the only thing that would have made sense to you would have been the inception move down over here that we spoke about. Because this is all distribution. Same here. But this one was more clean cut. You see, this one had to retrace first. It stopped out the buyers and then moved up. But if you track it, like you're going to track, like, you know, you're going to track an animal. You got to track the animal's footprints. and see what cave it came out from. So you're like, oh, okay. So this is where the bear came out from. So that means in these caves, there's a high probability you're going to find a bear in there. You know, the bear might not always be there because you're not always going to get this. You know, the bear sometimes might not be in there. But there's a high probability there's a bear in there. Or a bull. I guess in this case, a bull. That's what you're going to track it to. Because, you know, if you're trying to catch these moves for yourself, when you build a strategy, you're trying to see how you can catch this. Right? So you have to track price all the way down. And at some point, I used to trade the 30-minute, the 1 hour, because people used to tell me it's a higher confirmation time frame. And I never was getting enough detail. But once you start going down, 15-minute, 5-minute, 1 minute, you start to see some kind of a repetitive pattern. This was not the cleanest distribution though. There was low volume and volatility in this break though. But you're going to see the pattern. Can you share SMA configuration? Yeah, this is 50 and the 8. You can download the SMAs in description. Denying head and shoulders and upward to the daily. Oh, denying head and shoulders. Yes, exactly. It's denying head and shoulders over here. Continuing the bullish trend. So I was like, man, if these buys were to play out right here, can see upwards of all-time highs. That's a beautiful area here to get involved. I personally would not have survived it. My stop loss would be too tight. Even if I got like 16 pips or close at 35%, it would have been too tight. The only way I could have survived this was through a swing entry model. So if I took a swing entry model here with my stop below, that would be the only way that I could have at least gotten stuck into this trade, but not off a consolidation break. So maybe even a shotgun entry, because you got the 5-minute. You even got a shotgun entry confirmation in there. You got shotgun entry, you got swing entry, you got consolidation break. For price to respect the 8 SMA. Look at 8 SMA being still respected. You see how beautiful that is? Did not even close that 8 SMA, because you'd be taking this based off a 5-minute entry. Could you please explain the role of it in your trading? It's a really nice volume awareness tool. So you see, like, if price is breaking in your direction and you got it in your favor, that's what we call the dynamic support that's been formed. It's like a dynamic support. See how it's just been respected? So it's nice to have in your arsenal of tools to understand how your trades can potentially play out. It's a volume awareness tool. So sometimes you get the SMA crossover like this, which is like the best thing you can get. And then sometimes you're just trading above the or below the 8 SMA. It's also good for holding. So if you like want to hold your trades longer, you can hold till it crosses the SMA. So let's say you took like a sell over here. You have a sell over here, and then you just want to hold until it crosses the SMA. Because once it crosses the SMA, usually it's done at that point. So instead of like securing early like you usually would, sometimes it helps you like really hold your trades much longer than you expected. Man, beautiful. And little simulation here. Simulation play. So you see, all right, so I remember Jay was asking this quite a bit. So you see, Jay, this is what I mean. Like if you're in a range like this, you see you get higher probability of these runners if you have space in between those areas. Sometimes it just moves up, you know, sometimes you don't get that retracement. Sometimes you're just gonna get the candles, they're just gonna continue to move up bullish like this. Boom, boom, and just continue flying up. Goes like 80% and then just let the rest run. Yeah, I think it's pretty good. Pretty nice. Pretty straightforward TFX concepts. Buy hold from 43. Are we together, guys? Leave a 1 in the chat if we're together. If this makes sense to you, leave a 2 if it doesn't make sense. Leave a 1 if it makes sense. I took the risk and I buy from 49. Oh. Let's see, 49, 1 minute. Next accumulation. Oh man, look at that distribution. That's a beautiful, beautiful play. Right here. Just break and keep running. 1. Hoorah.
Spartans!
Yeah, this is beautiful. This is what I wanted to see happen on the other trade. You know, because what do we get over here? We get a... Oh, but that resistance doesn't look so clean. But it's kind of like a small little fake out. Pull back above, create a support, then break up the highs to continue running upwards. But in this scenario, you see we got a similar thing like that happen. The fake out came at a different area. So it came here. Still create that support, but that's what we wanted to see happen, the distribution to come above. But it's the same concept, but you know, it's slightly different. It's slightly different. It's not the cleanest to see. It's not the easiest to see. Got inverted head and shoulders here too. Left shoulder, head, right shoulder. Beautiful, man. And it's normal to be right about the direction and wrong about the trade. Like that's totally fine, because sometimes the market will just shake you out. You know, depending on what entry models you use. Like for this, a consolidation break would have been shaken out, but a shotgun entry or a swing entry model wouldn't. It's just the way it is sometimes, you know. But the important thing is you're consistently hitting the mark. Every day, whatever mark that is, you're consistently hitting it. I put my stop loss at 35. Really good PA too. Very nice conditions today. Like we're definitely seeing volume in here and price is moving. We're currently up right now 0.54%. I wish this break happened pre-New York though. It came in sooner. So like that 5 a.m. candlestick. It did come in quite soon. There's a next range that's filling. See, the market loves these areas. It's like a magnet, basically. It's a magnet right here. It's a magnet right here. And you also got the all-time highs too. Are you going? What's that? Are you going to trade on gold today? Yeah, I already took 2 trades. You're in shorts right now? Yeah, we took 2 trades. Might take another trade later. I'd like a buy, to be honest. I'd love to get a buy signal. I missed my long trade on EU. I placed a buy limit and but the price is just right above it, then go rise. That's what happens when you're catching falling knives or trying to catch tops. You're gonna have that gonna happen to you quite a lot. You know what I used to do when I used to trade like that was I used to slowly scale into my trades. So if I thought price was gonna reject, let's say over here, instead of missing it by like 2 pips, at least slowly scale in like maybe 50% here, and then I scale in another 50% here. So even if it rejects sooner, I'm still involved in the trade. You know, so I still have options to catch something. But if you just have one full-on position like this, yeah, sometimes the analysis is too perfect. And then you miss the entries. Yeah, can win 95%, but 5% losses take out 25 wins if you... Yeah, exactly, if you trade with massive stops. Someone said they took a sell here. Beautiful little corrective range. Range correction. Very clean. Very nice. Little impulse. Maybe this is like a swing entry. This should have only been swing entry. Down below here. Stop loss below that support for price to move up. Little swing entry model. Swing entry here. Swing entry here. Kind of wild. This candle didn't even have a bottom wick. And it shot up like 54 pips, 55 pips. No bottom wick. My 1% would have been 6%, but I know I need to focus on the fact that I'm profitable. Yes. Yeah, you gotta focus on... You know, the thing is, some of y'all have good systems. Yeah, amazing traders. Amazing traders. The problem is you don't know when to stop. Taking way too many trades. You know, you don't get paid to trade. You don't get paid. You get paid to wait. I know you heard it before, but it's the truth. You got amazing systems, but you're just over trading them. Because it's just as important to know, obviously, when not to trade as it is when to trade. It's probably more important to know when not to trade. Because then at least you can, you know, the rest of it you can sort out easier. Because if you know when to trade, that's also a problem. That means like every time the market shows you a signal, you're getting into the market. Because you know when to trade, right? It's when the market shows you a signal. That's when you trade. But you got to know when not to trade more than when to trade. You see, everything always goes back to risk in trading. You always got to work your way from the risk upwards to the reward. But we're focusing too much on the reward. It's counterintuitive because we want to make money and we want to take trades. But it's just the same way as achieving anything in life. If you chase the money, you never achieve the goals. But if you focus on the skill and the craft, then it's like you're tricking the universe. You're like, look at me. I don't care. I don't care. I'm just putting in the work. You know, and then the universe is like, I'm going to trust this guy with this money. I'm going to give it to this guy. You know, instead of the other guy who's just chasing the money all the time. And he's doing everything just for the money. Yeah, but I think right now if gold, it's already moved up. It's filled up more than 65% of this range. It's kind of like 50-50, but I'm still definitely looking for buys. I still think price has a lot of leg room to move up. But you see this hourly candle, since we're just looking at 1 or 2 trades per hourly candlestick, this one already had its move. So this is its move. It's already moved up. Every single candle, hourly candle, is going to give you a potential entry. You see the sell one over here. This one gave one proper entry. Yeah, I think it was just one proper entry. Yeah, you could not have scaled into this. There was just one proper entry to catch that hourly candle from the structure up over here. Every hourly candle can give you a move. Like you see this Audi. This Audi, I think it gave. Let's see where it started from. It gave like one entry. Yeah, it was a swing entry, maybe even a consolidation break from these highs. Is like beautiful. Zero drawdown, pretty nice. You see, best trades don't give you that much drawdown. They'll just go into profit like that. These trades very choppy. Still played out, but this is playing out off a 5-minute time frame. Still played out, but there's a beautiful little consolidation break. Not much drawdown. But yeah, this Audi had one move. You know, it's all about dissecting these. When you're dissecting the market, it's in essence, it's the Audi candles moving. It's the Audi candles moving. So if you're not seeing any structure on 15, 30, 5-minute, and all you're seeing is structure in the 1 minute, it's easy to dissect the market to see where the inception was. You know, it's not rocket science. The more candlesticks you have, the more support resistance forming. This is easy to spot as an inception for that hourly candlestick to push up. Do you think there will be more action before pre-NY? I feel like that was a pre-NY move. About more action, I think it would be better to wait for the next hourly candle. Sorry, that was not the pre-NY moves. That was a pre-NY move. This was. So if candles already moved up like this, it would be better to get a fresh hourly candle since this one's already pushed up. In total, like, you know, almost about 100 pips, 91 pips. Just maybe you get away with like some kind of a counter trend move, some sell. But I think price still wants to move up bullish. And it's probably waiting for the next hourly open. Re-break the highs to move up. Will gold continue to move up on the next hour candle to create all-time highs? Next hour candle to create all-time highs. Let's see. It's gonna say yes. We're gonna move up. Let's see. However, the presence of the SEC suggests that clarity and regulation may temper this ascent, guiding it with caution rather than under unrestrained growth. Ooh, unrestrained growth. Therefore, gold may not reach all-time highs within the next hour. Damn. Well, we like unrestrained gold growth. That's what we're having in gold right now. You know, they said that the market is overbought, but you know, people are still buying here. See, gold is overbought, but it doesn't seem to matter. We like unrestrained growth. Should I hold my 36.39 buy? 36.39? Man, you gotta secure. I don't know how you got 36.39, but this is an amazing trade. You know, you're up here 176 pips. You can secure 80% and then just let the rest run. You know, you're such a good position here because price right now is just creating all-time highs. Yeah, secure that, bro. Like, honestly, you know, be real with yourself. When do you ever get a trade that moves that nicely? You know, there's a higher chance you wouldn't get those trades happen so often. So I would secure something. Man, look at this. You see that reversal signal that we showed you earlier on? Over here before this move went up? Man, look at what happened right here. What is this? Same thing. Can't make this shit up. It's the same thing that happened right over here. Look at this. Price came down. Consolidate, then reverse. It's not rocket science. Clean range on the left-hand side. Look at this. Come on, man. That's like child's play at this point. It just prints it somewhat differently. Each time, because the market's not perfect, it's gonna print it somewhat differently. Use a trade copier? For what? I just have one account, so I don't need to copy trades. Would you ever consider some game streams? I rate you'll do well. I join every day. Yeah, we did game streams in the past, but the viewers would drop, like 90% of the viewers would drop. So I would need to start a new channel for gaming. It would be fun, but it takes a lot of time. You know, it takes a lot of time, video games. You can play like 7 hours. I could play 7-8 hours plus, like easy. You know, these video game streamers, they got it easy. They got it easy. All they got to do is play the game. Man, time goes so fast when you're playing games. But that's another problem because, you know, you could be using that time to do something else. You could do something a lot more productive. So that channel would be so hard to grow. Like, it would only be on the weekends. I'm stuck in 5K funded account since May. I had reached 6% profit target and now I'm 0.25% up. I mean, it's if I was going to give you any suggestions, I would say like start journaling your trades a bit more, start gathering your sample sizing, start sample sizing your trades so you can just better understand them. Like why you're performing poorly, why you're performing, why you could improve. You can only do that if you start actually journaling your trades. Because, you know, like everybody has a different problem. You know, every trader has a different set of challenges that's unique to them. So the most basic advice I can give you is just take less trades, between 1 to 3. Maybe most of the time the problem is over trading. Hey bud, hey Chris. What's good? Christopher Chong. That's a Asian name with a Christian name that sounds like an Asian name. I don't think I've ever met don't know if you're Asian. It sounds like an Asian name with a Christian name. I don't think I've ever met someone like that. Anyway, not important. Welcome. How can I copy your trade history template? You can go on the description. There's a free journal you're gonna click. This is a free trading journal. Then I'm gonna give you access. Then you can use this. Is the liquidity grab situation below here. Malaysian Chinese. Malaysia is I think Malaysia, if I'm not mistaken, is the 3rd or the 4th country with the most Indian population. And then the first country is New York. And then the second country is the UAE. Malaysia is somewhere around there. Australia is like 10th. Man, I didn't know there's so many Indians in New York. Maybe that's why the Indian streamers, man, they have like 3,000 viewers, 5,000 viewers. Tetra, hello. Could you explain why you took a sell and the way gold is so bullish? Yeah, the sell was a sell idea over here because I was looking at a fake out. This was a fake out situation that happened here. We got fakey above resistance, and then I was looking at as clean range for price to move down. It still played out, but it looks like there was a double fake out. There was a double fakey again above here. But it was a counter trend move, you know. The potential for price to move was there, but it was still a counter trend move. So that was already very clear. Like price was at the all-time highs. That's why I'm still like very cautious about any sell positions. In the UAE here, there's like 70% Indian. Right, it's so hard to believe anything on social media. Is it seriously Miley Cyrus? And that doesn't look like Miley Cyrus. The fentanyl, bro. It's a damn shame. Say fentanyl is just a small little bit like this is like what 100x more addictive than heroin. Near damn impossible to get off it once you're hooked. Please, I need access to the journal I sent you an email already. Okay, I'm gonna accept it later. But I already accepted some emails today. So if you just recently requested it, then I will accept it later. Yeah, it's Hannah Montana. Hannah Montana. Yeah, this hourly needs to close here. This is about 16 minutes. I don't think we're done with the all-time highs for the day. Do you send all the trades you take in the single group? Yes. All the trades that I take, I send in the single group. And if I did not send it, then I wouldn't add it onto the spreadsheet. It's gonna need to accumulate again because majority of the time, remember, like market's just moving sideways. So it just had a distribution right now. So 90% of the time, again, we have to wait. Then wait for the next opportunity for distribution. This is consolidate, small try of distribution, retracement, consolidate, small push, consolidate, small push, consolidate. It's a beautiful little liquidity grab though, if that can form something interesting in a bit. I was doing a small similar thing that happened over here as well. Little inverted head and shoulders. Left shoulder, head, right shoulder. Kind of tight. It's like the same thing that happened here, but it's a little bit tighter over here. I know it can be kind of hard to understand, but you know, just give the stream, like be on the stream for at least a month, a quarter or something so you can understand the concepts. I don't expect anybody who just joined the stream today to know what I'm talking about, because these are not, these are ways of looking at markets that's intrinsic to me. This is not something that I learned from a cookie cutter course. You know, a lot of these courses are like cookie cutter courses. They'll just show you how to use a Fibonacci or a trend line or something of the sort. Or a supply and demand zone of sorts. I'm 15 minutes away from my confirmation for further downside on GJ, but only if my setup is given to me. Let's see what's going on GJ. Oh, GJ's still moving down. Damn, where's GJ going? You see, the problem with this move down is there's just no range. You have so much support over here. You know, you're coming into support. Look at this, just tapped into support level. It's accumulating. Give GJ some time. It needs this new hourly candle. Even if it wants to move down, it needs this pre-NY candle, pre-NY volume to come in here. Just give it some time and it should be good. It's like same thing as gold, you know, if as bad as you want gold to move up, this candle has already moved and there's 13 minutes left inside of it. It will have a better chance on the next candle that you're going to get your running trades, because that's going to be fresh volume. It's like it detaches itself from the old price action and then has a better chance to keep moving. I think that 4 hour flipped. Oh, not yet. But I think it must have flipped on that push upwards. See, 4 hour came down, small little grab here on the 4 hour. Got 12 minutes for my broker's 4 hour to close. So you're also going to get, man, you're also going to get a new 4 hour candle. And look at the way 4 hour candles have been moving up here. Bullish, bullish, bullish. Holy. All right, let's look at the daily targets then, in this case. If daily has already moved up about 300 pips, what are we looking at here? 3690, 3680, 3690-ish. That could be a good daily target. From where we're currently sitting right now, that's about 300 pips. 280, 300 pips. That's the amount of leg room that it has. It could even do more than that. If you look at the previous daily candle here, this did about 680 pips. You know, but we could definitely look at around 3,700. Oh yeah, 3,700 looks good. That's like a nice round number over there, 3,700. But you don't want to be too greedy. It's always better to under-analyze than over-analyze. So we're looking at maybe 3680, 3690-ish. It's gonna break the all-time highs. Needs to set up, maybe retrace and then set up a bit and then keep moving upwards. Why do different brokers have different 4 hour candles? It could be a time zone thing. But I think I'm going to head out here, guys. I will see you tomorrow for the London Open. So take care, everybody. Appreciate the likes. Appreciate y'all tuning in. and see you on the next one. Adios.
Now